Investing in index funds has been a staple approach for both new and experienced investors seeking consistent growth and returns. Among the many investing alternatives available, Fidelity index funds have established a reputation for their high performance, reasonable costs, and diversified selections. In 2024, the financial environment will continue to shift, making it critical for investors to remain educated and make smart decisions. Let's get into it. Number 1. Fidelity 500 Index Fund, FXAIX. The Fidelity 500 Index Fund seeks to replicate the performance of the S&P 500 Index, which includes 500 of the top firms in the United States. This fund is a must-have in many investing portfolios because of its wide market exposure and low cost ratio of 0.015%. Over the last decade, FXAIX has had an average yearly return of 12.9%. Despite market swings, it has regularly beaten many actively managed funds, making it a safe bet for long-term success. The S&P 500 is often used as a benchmark for the broader market. Investing in FXAIX gives investors diverse exposure to the top U.S. corporations, assuring stability and development. Its minimal costs and strong performance make it a good choice for both novice and seasoned investors. The fund's top assets include Apple, Microsoft, and Amazon, capturing the performance of the biggest and most prominent enterprises in the U.S. economy. Furthermore, FXAIX's low cost ratio implies that more of the fund's gains are sent directly to investors, increasing long-term growth potential. Number 2. Fidelity Total Market Index Fund, FSKAX. FSKAX aims to mirror the performance of the whole U.S. stock market by investing in a diverse variety of firms, from small cap to large cap, across numerous sectors. This broad-based strategy enables investors to capitalize on the general expansion of the U.S. economy. Over the previous 10 years, FSKAX has returned an average of 12.1% each year. It has performed similarly to the whole U.S. market, giving comprehensive exposure and stable returns. FSKAX's wide market exposure makes it a good option for investors looking for diversification. Investing in the whole market allows investors to reduce the risks connected with certain sectors or firms. Its low expenditure ratio of 0.015% contributes to its popularity as a cost-effective investment. FSKAX covers hundreds of firms, providing investors with exposure to the growth potential of smaller and mid-sized businesses, which may occasionally outperform bigger corporations throughout market cycles. This diversified strategy lowers the chance of poor performance from any particular firm or industry, making it a solid option for long-term investors. Number 3. Fidelity U.S. Bond Index Fund, FXNAX. The Fidelity U.S. Bond Index Fund follows the Bloomberg Barclays U.S. Aggregate Bond Index, which covers a diverse range of investment-grade U.S. bonds. This portfolio is suited for investors seeking income and stability. Over the last decade, FXNAX has produced an average yearly return of around 3.4%. While its returns are lower than those of equity funds, its capacity to remain stable during market downturns makes it an important component of a diverse portfolio. Bonds plays an important role in portfolio balance, particularly during turbulent market situations. FXNAX provides a low-cost alternative to obtain exposure to the U.S. bond market, with an expense ratio of just 0.025%. Its consistent income stream and minimal risk profile make it ideal for risk-averse investors or those approaching retirement. The fund's mix of government, corporate, and mortgage-backed securities offers broad bond market exposure, lowering overall portfolio risk and maintaining a consistent income flow even during economic downturns. Number 4. Fidelity International Index Fund, FSPSX. The FSPSX intends to mirror the performance of the MSCI EAFE Index, which includes big and mid-cap equities from developed economies outside of North America. This fund offers investors exposure to overseas stocks. Over the last decade, FSPSX has returned an average of 4.5% each year. While its performance is behind that of U.S. stocks, it provides significant diversification advantages. Global diversity is critical for decreasing overall risk in an investment portfolio. FSPSX enables investors to capitalize on the development potential of developed economies outside the United States, offering a buffer against domestic market volatility. Its expenditure ratio of 0.035% assures that investors keep more of their gains. The fund's exposure to a wide range of economies, including Europe, Japan, and Australia, offers a balanced approach to international investment, capturing regional economic developments while avoiding the risks associated with currency swings and geopolitical events. Number 5. Fidelity Small Cap Index Fund, FSSNX. The Fidelity Small Cap Index Fund aims to match the performance of the Russell 2000 Index, which contains small-cap U.S. firms. These firms often have better growth potential than their large-cap rivals. Over the last decade, FSSNX has averaged an annual return of around 7.2%. Small-cap equities, despite their higher volatility, may provide large, long-term profits. Investing in small-cap stocks via FSSNX gives you access to firms with strong growth potential. These equities have the potential to outperform bigger corporations during economic expansions. The fund's 0.025% expense ratio offers it a cost-effective approach to boost a portfolio's growth prospects. Small-cap firms are often in the early phases of their development cycles, with significant upside potential. Including FSSNX in your portfolio allows you to profit from the agility and creativity of smaller firms, which may result in outsized gains over time, particularly in a bullish market situation. Number 6. Fidelity NASDAQ Composite Index Fund, FNCMX. FNCMX intends to mirror the NASDAQ Composite Index, which is strongly weighted in technology and innovative firms. This fund allows investors to profit from technology-driven development. Over the last decade, FNCMX has generated an outstanding average annual return of almost 16.1%. The IT sector's tremendous rise has substantially aided its exceptional success. In recent years, technology stocks have been the primary driver of market growth. FNCMX offers focused exposure to this dynamic industry, capturing the rise of firms at the cutting edge of innovation. It has a higher cost ratio of 0.29% than comparable index funds, but the potential compensates this for substantial returns. With top holdings in prominent tech firms such as Apple, Amazon, and Alphabet, FNCMX is well positioned to capitalize on continuous technological developments and digital change across sectors. Investing in FNCMX provides exposure to some of the world's most creative and high-growth firms, ensuring that your portfolio stays ahead of market trends. Number 7. Fidelity Zero Total Market Index Fund, FZROX. FZROX is one of Fidelity's zero-fee funds, which are aimed to entice investors with no-cost ratios. It tries to mirror the Fidelity U.S. Total Investable Market Index, which includes a wide range of U.S. companies. Since its introduction in 2018, FZROX has performed similarly to comparable total market index funds, producing solid returns. While it lacks a decade-long track record, its performance has been encouraging, with an average yearly return of around 13.3% since its launch. The zero-cost ratio provides a substantial benefit by letting investors retain 100% of their profits. FZROX offers wide market exposure, making it a good alternative for budget-conscious investors looking for full market coverage. The fund's no-fee structure appeals to investors who want to optimize their investment returns while avoiding extra expenditures. FZROX's diverse portfolio contains big, mid, and small-cap firms, allowing investors to profit from the general expansion of the U.S. market. Well, picking the correct index funds is critical for developing a stable and growth-oriented investing portfolio. Fidelity provides a varied choice of index funds, each with distinct benefits targeted to certain investing strategies. The 7 Fidelity index funds mentioned in this video have a solid track record, reasonable costs, and tremendous growth potential. By combining these funds into your investing plan, you can create a well-balanced and diverse portfolio that is ready for success in 2024 and beyond. When making choices, you should always keep your financial objectives, risk tolerance, and investing horizon in mind. With careful planning and smart investing, these Fidelity index funds may help you manage the ever-changing market environment and meet your financial goals. Last but not least, don't forget to do your research before investing in any of the ETFs. Thanks for watching. We'll see you in the next one.